record this for our students that are in our subscription membership that will be getting access to the recordings itself. Awesome. So starting today, let's get it. I love it. So what's the dollar index doing for us? Okay, where's the market going? What's happening? Why did we have volatility today? And who was trapped inside that volatility? Okay, and who took advantage of it? Okay, so smart money. Okay, smart money. El español será para el siguiente martes, pero de igual manera el día viernes voy a hacer un español con ustedes. Okay, hoy toca en inglés. So understanding the fact of smart money, where it's directed, and where's the trapped money, right? Liquidity zones. So real quick, I want to go over the DXY, which is the dollar index, so that we can actually have a full visual of what the market's doing and where it can go ahead and correlate itself, towards the future. So first of all, one thing I want you to understand is the fact of who are the big players, who are the players in Forex, right? Who are the ones that are actually making all this money? So the ones that are actually making all this money, okay, is the banks, right? Who are the top 10 currency traders? Okay, and I say this over and over and over just so that way you guys can go ahead and have a full visual of who are the people, who are the top currency traders, who are the ones that we're competing against, right? We need to be able to understand who are the ones that we're competing against right here, right off the bat. Who are we competing against? We're competing about Citi, we're competing against Citibank, we're competing against JP Morgan. All these banks, right? How much are they getting of the share? They're getting 12%, 8%, 8%, 7%, 6% of $1 trillion market, right? So what does that mean? They're having tons of lot sizes that they're putting in the market. So why are we going to compete with them when we can go ahead and just join what they've been doing, right? They leave tracks behind, they leave clues, and it just depends out of us how woke we are to understand where those clues are so that we can take advantage of it and where exactly is the smart money. Okay, if we're able to identify where the smart money is, what's going to happen? We're going to go ahead and be able to take action on that, and due to the fact that we take action on it, we get wick entries. Now, who today was following, the signals I sent out, because I don't send signals, right? I give you guys a clue where the market is at the moment and what is that catch. So today we had about 4 to 5 wick entries that I was able to attend. Why? Because we had smart money come in play and take all those stop losses out. And what happened? I entered right when all those stop losses were taken out. So real quick, just want to give you guys an idea. Who are the largest players in the Forex market, in the niche? Who are the top traders? Our banks, right? The banks, the government, and so on. And where do we get all this information from, right? We get all this information from where, right? Let's say Forex patterns. What are our top Forex patterns? What are the patterns that come up first before we do anything? Look at this, double top, right? What a coincidence. It's a double top. Now, who are the people that put this information up there? Is it the government, or is it us? Is it retail traders, or is it institutional traders, right? The government's the one that puts all this information out there, right? It's free, okay? It's free for them to put money out, to put all this information. They would rather spend 10, 15, 20, or even, days on putting this information out for what? For us to go ahead and study it. And at the moment we study it, what are we trying to learn? We're trying to look at these patterns. We're trying to look at these M's, these double tops, these W's, double bottoms, triple bottoms, head and shoulders, right? We're trying to find all these patterns so that way we can enter on them. And what usually happens? We see a small drop. We're on the double top. We're on the information drops a little bit. We're excited. We put more lot sizes. We get emotional, and we want to go full on, right? What happens right when all our emotions are at the top and we see all these profits? Goes right back up, takes us out our stop losses, and when it takes our stop losses out, what happens? Dips back down, right? So that's something I want you guys to understand. Order blocks, smart money, and clues, right? Liquidity. Where's liquidity? How can we find liquidity? How can we find points of interest that the banks are going to go ahead and take away? Now, order block, one thing you guys want to go ahead and understand is imbalance in the market, order block, and then clues in the market, right? Right here, we can actually see imbalance in the market. What is imbalance? Imbalance in the market is the fact when we go ahead and find that there's just selling momentum, right? There's selling pushes. There's no buying in these zones. So where do I find areas that we do not have we do not have buys in the area? You guys see this weekly candle right over here? This weekly candle is interesting for me, right? A lot of people would call it a bearish Mariposa, right? If you know, go ahead and you understand price action. This is bearish Mariposa that we're seeing. We're seeing full of momentum, full of bearish momentum. What does that mean? It means that there's sellers in the market, right? There's a lot of sellers in the market, but when there's a lot of sellers in the market, usually when we see a big push of momentum, just like this, that we saw this big push of momentum, what's happening? There's a lot of orders that were taken out before, so that way the market can push down, right? When you're buying a position and your stop loss gets hit, you sell it back, into the market. If you're selling a position and stop loss gets hit, you're buying it back, right? So you create momentum towards the other direction of where your stop loss was directed at first. So this is an interesting area that I'm going to take in consideration the whole time, due to the fact that I'm seeing order block, I'm seeing imbalance. And what does imbalance mean? Imbalance means when there is a lot of momentum pushed towards one direction without there being a fulfillment of orders. What do I mean by fulfillment of orders? If there's a lot of sales and there's no buys, that's imbalance, right? I need to see those sales. I need to see these pullbacks, right? A lot of people don't take in consideration what these pullbacks are. Okay, I don't want to see just this big push. I want to see, it come back down, cover that imbalance, and see that pullback has been taken order, because there's orders that we're waiting over here, right, from banks. There's orders that we're waiting over there with banks that they're negative, and they need to come back and take out their orders so that way they're not negative and they are now profiting. Okay, so with that said, I just want you guys to have a little bit of awareness of where it is that I'm going and so on. Now, another thing, why was I mentioning that double tops, double bottoms, where this information is coming from, who are the biggest players in the market, and who are we playing against, right? Because we're not playing with them, we're playing against them. Unless we know how to actually trade institutional trading. Once we understand institutional trading and we see those clues that the market leaves us, what's going to happen? We're going to go ahead and take advantage of those clues so that we can get those wick entries and actually enter the market where we have to enter. So with that said, right here, I see imbalance. But what's imbalance exactly? Like I told you, it's push momentum. But what is securing this imbalance? Look at this right here. So I see imbalance, and then I see the market come down. You see these wicks right here? Those are areas of interest. I'm taking interest in those wicks because this is also proof of exhaustion in those areas, which creates liquidity right on top. So if I see this on smaller time frames right here, okay, I assure you we're seeing double tops, triple tops, or so on. I'm gonna go ahead and put it on blue. Let's go. Let's say we're on the 4-hour time frame. Okay, let's go back there and see what we can actually find on the 4-hour time frame. Look at this. We're seeing double tops. Okay, double tops. Right. What's happening above those double tops? We have orders right above here. Okay, with stop losses. Stop losses to be hit. Okay, stop losses that need to be taken care of. And look at this over here that I told you. I told you guys there's just selling pressure right here. This whole time, selling pressure, selling pressure, selling pressure, right? There's no buying pressure. And when you can identify selling pressure, is the fact when you see a lot of bearish Mariposas. Bearish Mariposa, bearish Mariposa, bearish Mariposa, bearish Mariposa. Okay, we filled in liquidity. Bearish Mariposa, bearish Mariposa. So like right here, this is a really good point of interest. I'm going to go ahead and take care of. I'm going to take this in consideration, this point of interest, right? And that is why I went ahead and put our lines to the right. Also, right here, these are areas of interest because it is 50% of my candle from my weekly time frame. Okay, that's just how we go ahead and understand the full concept, understanding the market patterns, understanding the pattern itself, and understanding what is the percentage of the pattern that you need to go ahead and cover before you go ahead and put those lines out. Okay, now that's all stuff that we teach as well. So going into that, let's go back to the weekly. Going into the weekly time frame, once again, I want to find those double tops. I want to find those areas that I need to pay attention to, right? If you go ahead and flip the chart around, look at this. I flip the chart around, and I'm seeing this potential head and shoulder, right? But I see these areas of liquidity. Okay, see your areas of liquidity. So what's going to happen with those areas of liquidity? They need to be taken out, right? Look at this right here. Market comes up and takes out right here. What was right here? Okay, why did it immediately go down right after this area? Why? The reason why is because we see our order block over here that was not fulfilled. The market came back up and fulfilled that order block, so then it can continue with its downtrend. So what am I expecting with the DXY? I'm expecting for DXY to continue on falling now, okay? So in the next week or so, I'm expecting for this to continue on falling due to the fact that it has fulfilled its order block, and overall we are still bearish with this, with the DXY in general, okay? Now look at the area it came into, wick areas, right? We came to wick areas. Why am I saying did I put this line right here? Real easy. It's a 50% of this candle itself. 50% of this candle. As you guys can see, 50% of this order block candle. Okay, I put a line right across, and that's where it has to come back into. Look at this. Came back into that area. Now we have that area fulfilled. How can we get better entries for smaller time frames? Okay, let's go on smaller time frame. Let's go and check in the daily time frame. Let's see if we can find liquidity areas. Okay, look at this. We see in the smaller time frame, we're seeing that the market overall, right here on the daily time frame, we are bullish, correct? But understand that on the weekly perspective, that's why you got to see bigger time frames. We are bearish on weekly time frame, right? And we also see this inverted head and shoulder that a lot of people see, and we expect from ours to continue on going up. But the fill order block, the fill imbalance, starts going down. So zooming in, where's my areas of liquidity? I have areas of liquidity that have not been fulfilled, that are being fulfilled at this moment, right? I have areas of liquidity that are being fulfilled at this moment. And then also, if I wanted to, I can go ahead and add our trend lines, right? I can add my trend lines and do for the areas that have not been fulfilled and are being fulfilled at this moment. So these are areas of interest I'm going to go ahead and take into consideration. Right here, why? Because we have some really good price action. Okay, we have some really good price action. Goes to the upside, and then we have that huge drop, which is an area of interest that I have. Right, comes down and then comes up. Right here, the first entry would have been out of our golden pocket. We would have been able to go ahead and take into consideration my golden pocket. If I go over here, let's go ahead and go to golden pocket. Would have came directly to our golden pocket area. You guys can see, came directly to our golden pocket area. We have exhaustion. Where do we have exhaustion? Right underneath our point of interest. And then we have price action on lower time frames and then drops down, right? And what are we seeing? We're seeing this inverted head and shoulder, right? What is everybody waiting for when we see this inverted head and shoulder? It breaks our neck, you go straight off, right? Well, taking consideration, smart money, where's it at, right? Our smart money previously that was able to identify by a big push up before the down push was this area right here. This is an area that I take in consideration. Do the up candle before the down move, and look at that. We would have been able to have a wick entry. Now, where's my next point of interest? The next point of interest, right here. Up candle before the down move. Find this trend line, perfect, right? Now, what's going on right here on lower time frames? Let's check it out. It's on the hourly. Okay, we have a good, nice trend line. We have our area coming back. But what Fibonacci is this? What level of Fibonacci is this? Is this the Fibonacci that I take into consideration? One of my golden pocket areas? Of course it is, right? Into the max area that was 78.50. Okay, 78.50 came down to that area. If I see the market potentially come back a little bit, do a little retracement, and then continue on falling. Right, that's what I'm expecting on DXY. DXY, I'm expecting for it to continue on falling. Okay, we just gotta go ahead and take into consideration where the market can potentially go. But right now, we will see. I'm seeing momentum coming in. I'm seeing a potential, bearish Maribozu. This finished bearish Maribozu. We're seeing our MA crosses, which potentially can lead us to more momentum to the downside, and it's going to assure me where the market can potentially go. Right now, going on to these trades that we were able to go ahead and go through the day today. I'm going to go ahead and explain them real quick, right? Because they're based off of order blocks, based off of smart money, and so on. This one we're still in. We're still holding it. There's another one that we're not holding so far right now. CAD-JPY. Let's see it right here. What happened? Okay. CAD-JPY. Let me go ahead and delete these areas right here. So on CAD-JPY, I was able to identify areas in the market that were point of interest for me, right? Where I had smart money. So I knew we had some smart money over in this area. We had to go ahead and come back to this area because we saw liquidity and we saw liquidity over here. But, it's not always going to be that way. So what happens when it's not always going to be that way? I go into my daily time frame and start looking for key levels in the market. Where are my key levels in the market I'm finding for? I'm finding these key levels, right? Areas of wicks where I can go ahead and find exhaustion for me to have that next price action. But also, if we have news that goes in our favor towards the direction that we do not want to go to, I'm going to take that in consideration. Why? Because smart money is leading to take out all those stop losses to then come back down and get a bigger momentum, right? So let's go on the 2-hour time frame. Let's see what was happening in this area. Look at this right here. We saw area of liquidity, area of interest, comes back up, and then where did it come to? It came to my golden pocket region, which is the 71 and the 70 and 61.8. Okay, came back to that area. Right when it came to that area, okay, I call this out on my Instagram. If you guys don't follow me, I'm sure you guys can do so that way you guys can go ahead and get some of these signals for free. I don't send out signals, but every now and then when I see good setups, I go ahead and do so. So with that said, it come up to this area, perfect entry. Why did I enter? When it comes to these areas in smart money, you need to be fast. You need to see what the market's doing. You need to see on the 1 minute time frame. My entry was on point. It was right over here. Right when you got that entry, market continued on going down, and then we had that big downfall, right? A lot of people, when I sent out the signal, I think it was like around this area right here, and then people just got this fall down there. So we can be potentially, I believe it's like 30 pips in college right now so far, or if not, a little bit more. Well, let's go ahead and check this out. So I sent it over in the wick. So yeah, there's a potential 44 pips. Right now, you guys should be like about 30 pips if you guys took that trade. So awesome on that point. Now going over to ADJQuai. Let's watch this. Watch this. This is smart money, right? This is literally easy. It's music to my ears. Watch this. It's like so sexy. So right here, we saw an area that was point of interest for me, right? I have an area where the market had a big push of momentum before that down move, right? I look for 2 points of interest. I look for the top point of interest and the bottom point of interest, which those two are going to be my target areas in the market, depending which one comes in first, right? So market came up to this area. I saw this big gap. A lot of people will say, okay, 90, 80% of the time, it's going to go ahead and fulfill that gap. Is that true? Yeah, it can fulfill that gap. But also understand that there's imbalance in this candle. Where's this imbalance in this candle? Look at this right here. Okay, what did I tell you guys about probably like 10, 15 minutes ago? Imbalance. Look at this area. What's right here? Only sells. Okay, sells. What does that mean? There's imbalance in the market. What does that mean? It has to go ahead and correct itself so that way it can come back, touch that area, and then go back down. But before it corrects itself and touches that area, we need to go ahead and grab some money. How are we going to be able to grab money? We're going to be able to grab money by creating double tops, right? If you guys see these areas of interest on top, what are you going to expect? You're going to expect these double tops, triple tops, 4 tops, 5, and so on, right? So we're seeing all these areas of liquidity. We're seeing this huge resistance that a lot of people are going to go ahead and sell, right? If they sold perfect, they sold this, it was cute. They sold this, it was cute. They sold this, it was pretty good, right? But where is the overall objective, right? If you guys were able to understand that there was an overall objective of it coming back up in this area, what would you have done? You would have been able to catch this area, okay? Catch this last push because why? It touched this area of interest right in this area. And right after it touched that area of interest, what happened? They took all their sales, took them out, and then turned them into buys. And we have this big push of momentum, right? We would have been able to catch this move right here if we paid attention to these double tops and these triple tops that were created right after our 2 point of interest, right? Point of interest high, point of interest low. We create those double tops. What does that mean? It has to come back down, touch our point of interest before it goes back up and clears out liquidity and touches that next point of interest. So as you guys can see, comes down a little bit more, touches point of interest, shoots up, and goes right past what? This area of liquidity where all that money is gathered up, right? All these stop losses, there's a lot of stop losses right here that were taken out. Why? Because these stop losses are stop losses that were taken out from swing traders, people that were holding their positions for over days due to the fact that they saw that the market continued going down, right? So it goes down. Where did I have my orders placed, right? We had first orders placed in this area right here, which is the first point of interest, which is the start of the candle, and then the second point of interest was at the 50% of that candle. You guys can go ahead and see. If I go ahead and put my 50% of the candle, what I'm gonna go ahead and find is gonna be the area of entry where I had, okay? The area of entry that I had was at 50% of entry. Let's see. Okay. Area of entry would have been right up here. Okay, that would have been point of interest. Now, market didn't go all the way up there, but we had at the point. So we had entries right here, and then we had entries up here. So these were both pretty good, right? If we go on lower times like M1, which is the time frame that I entered on, we were able to catch a wick entry over here as well. Okay, so we had this wick entry, and then we had our other entry, which pretty well, we were able to catch a good amount of pips. So if you guys caught this one as well that I sent out, you guys should have been able to catch 30. Right now, you guys are currently about 20 pips in profit. So that's good as well. But I want you guys to understand what the concept is and what it is I'm doing. You guys can see liquidity zones, understand where everybody's stop losses are at. So your guys' entry levels can be right above their stop losses, right? So I've heard buy low, sell high, right? How about you buy lower and you sell higher, right? You get better areas in the market to actually execute. You're welcome, brother. I'm glad you were able to get profit with those signals sent out. So now going out to CAD-JPY. What's going on CAD-JPY? Same thing. I saw a point of interest. As you guys can see, I have this point of interest, big push up before down move. And then I have my other point of interest down over here, right? Right here, market came back up, touched this area, and what did it correlate with? It correlated with my 78.50% written onto your tracing. Now, I want you guys to understand that these entries that I'm taking are going to be on the 1 minute time frame, right? And what causes these entries? Usually what causes these entries are news, okay? News and fundamentals. These that come out are people that, Donald Trump and them, that tweet information that manipulates the market to go one direction and then crash, right? Why do they do this, right? Why is this happening? It happens with the fact that they have trapped money up here. There's money up here that needs to go ahead and be taken care of. What happened? Point of interest came down, took care of that money, and then dropped. And as you guys can see, these drops are quick. They're pretty quick, right? They're really fast. And the reason why is because they just grab their money and go back down. They take all the stop losses out, and right when they take the stop losses out, they're like, all right, we're good to go. I get this full ride down, right? Now, sometimes you might not be able to get this, but since you already know those point of entries that were met in the past, okay, you might not get a wick entry, but you can still get that momentum pushed down, right? You were here, you were still able to get that momentum push. If you were here, you were still able to get that momentum push. Where's going to be my stop loss? I mean, where's going to be my take profit? Usually at the lows of the market, right? Or my point of interest. As you can see, I had my point of interest, which was this candle, 50% of the candle right here, right? We were able to find a point of interest. Why is this my point of interest? We had the big push down, okay, immediate push up. That was my point of interest, okay? So that was one of my point of interest. I want you guys to understand what are our points of interest, where's the smart money, and so on. And I can go more in depth with these in our classes, but for now, I just want you guys to understand the concept of this. AUD/USD, what's happening? What's going on right here? Okay, look at this. Smart money, right? I'm seeing it. You're seeing it, right? See what other people don't see. Liquidity, trapped right here. We see this big, okay, head and shoulder formation. This inverted head and shoulder. We flip it around, head and shoulder, right? So let's go back. Where's my point of interest? This counter right here. Up move before the big push down, right? That's a point of interest that I'm going to go ahead and take in consideration. Remember, I start in the middle, right? And then 50% of the candle. These are 2 entry points that I had. Market came back up, went through these areas, collected that money, and what happened? Right here, we had a small push. We didn't gather a lot of momentum. So what happened? We had another push to 50% of the candle. And then right after that 50% of the candle, what happened? We had this great push down. Now, these were sent to the Instagram as well. So if you guys took advantage of that, I'm glad you guys took advantage of that as well. I'll be posting more. The more you guys post me in, the more I'll post on Instagram. Okay. Now, US30. What's going on with US30? I'm loving it. So US30 right here, what I'm seeing, okay, and this is going to be probably the last setup I go through because this is actually going to be a live setup I'm going to go through and actually talk to you guys about. But I want you guys to understand what the smart money is and where the market's going. And actually, this whole past week, we had a great amount of setups. The past week, we were able to collect about 450 to 500 pips. And those were given out on Instagram as well. So hopefully you guys took advantage of that. And then today alone, just from these trades that were sent out, if you gather them all together, it's about 120 pips, right? So weekly, we're averaging between 120 to 500, 800 pips a week by these setups that we're going ahead and posting on there, right? And they're a good amount of setups. We were able to get about 5 or 6 last week, and then this week I was able to post about 4 more. We're still we're not even halfway to the week, right? I'm still expecting some more re-entries, which those re-entries are going to be phenomenal. I'm ready on oil, right? I'm ready on oil, but I'm going to go ahead and wait for a re-entry for you guys so that way I can post it on Instagram. So you guys don't have that yet, stay tuned on Instagram, put the post notification so that way you guys can get notified when I do post the oil trade out. US30, I'm not sure I already posted it, but if not, I will be posting it soon. Now, what's going on with US30? Let's look at this at a bigger perspective. Weekly time frame. Okay, I was going over some news. Some of my students. Let's go ahead and delete this. You know what? Let's just go ahead and delete everything. There we go. Cool. So US30, what was I seeing? I was seeing that the market created this point of interest, which was double tops, right? I see it, you see it, we all see it. Who doesn't see it, right? You see these double tops, point of interest, points that needed to be taken out. Now, where's the market going to go? Market's going to go right above it, right? Market's going to be right above it to take all those stop losses out. Market went right above, take those stop losses out. Now let's go on the daily time frame. Let's see what's happening. Daily time frame. Double, triple top. Right? We all see that liquidity gathered, and we go in, We fake people out that we're gonna sell, and then we push back up. We push up really high, real fast before we have that down move. Now, what's happening over here? I'm seeing deceleration in the market. Okay, for those people that understand price action, we have deceleration in the market itself, right? Deceleration in the market, which is potential, what? Reverse, right? We're seeing a potential reverse in the market. Since we're seeing a potential reverse in the market, we're gonna go ahead and get ready and start looking at price action and market structure on lower time frames. So with that said, where's my daily key level? Daily key level, when I see 2 or more candles that are being rejected at a certain point, that's gonna be my daily key level. I don't touch the wicks. I only touch the wicks. Don't touch the bodies. Go ahead and go right here. Awesome. So this is my daily key level I'm taking interest in. Let's go on lower time frames. Let's check H4. What's happening? H4 time frame. I'm seeing this liquidity, right? Liquidity being gathered up here. We might see one more push before the push down, right? One more push to the upside before the aggressive push down. But when we do push down, it's going to be aggressive. So take that in consideration. So H4 time frame, I'm seeing a lot of deceleration. Okay, so what's happening in this point? What's happening with this deceleration? A lot of people are intrigued to start selling, right? What happens when people start selling? I see it, you see it, we all see it. What are we seeing? Okay, or what are we not seeing? That's the question. We're not seeing what we're seeing. Real funny, but look at this. All these stop losses are right above here. Am I right or am I right? All these stop losses are right above here. I find that pretty juicy if I was a bank to go take them out before I drop down. If I was a bank and I want your money, what am I gonna do? Okay. Have you guys ever heard short the long and long the short? Right? You guys have. This is what it means bank-wise. So these are nuggets that I usually don't say, but I'm just giving you guys these nuggets just for today, right? I'm feeling thankful. So short the long and long the short. What do you guys think this is going to be? Is this going to be a potential short or is this going to be a potential long overall? What is everybody seeing? Short or long? Go ahead and type in on the chat below. Short, right? Short. You guys are seeing shorts, right? I see it too, right? But before we short, we need to long the short. What does that mean? We need to buy. Okay, take all these players out before we sell. Okay, take that in consideration. We need buy. Okay, we need to long the short, so that way we can get all these stop losses, get more momentum. Why? Because when people stop losses are taken out, if we're selling and their stop losses are taken out, okay, we're buying. But if we're buying and their stop losses are taken out, we're selling now. So right here, we're getting all these. Okay, we're creating some momentum to the upside. But understand that we need to go ahead and buy those areas so we can take all the stop losses out, get rid of everybody's money. Okay, take it in, and then run the other way. All right, what's gonna happen when that goes in? They see these. They see it breaks the tops. They're like, oh shit, it broke the top. What's gonna happen? Let's buy, right? So people start doing this. People start flipping their decisions from shorting to buying. Now people are buying. Well, that's wrong, right? That sucks. Why? Because we just juked you out over here and we juked you out again. So we took your stop loss 2 times. You could have just waited for a spring. What's a spring? A spring is an area in the market where we have manipulation. We have the market go up immediately. Okay, we have a big push to the upside, big push to the downside. Okay, what happens? We took everybody's money. Then we got them excited. We told them to sell, right? And then, oh my God, what happens? Market's coming up. People get out, but they don't know it's only coming back up to find that point of interest, which is the beginning and the half of that candle, right? And right when it touches those areas of interest, game over. What happens? We're dropping. Why? Because we took everybody's stop losses out. We're good to go, right? So once you guys understand what smart money is, I want you guys to understand, I don't want you guys to be hitting stop losses. I want to help you guys out. I want to go ahead and give you guys these tips so that way you guys can be like, okay, makes sense. Okay, short the long, long the short. Okay, exactly. It's manipulation. It's manipulation in the market. They do it. Why? Because they want to get their money, right? Where is all this information coming from? All this information is coming from the banks. Remember, it's coming from the banks, and since it's coming from the banks, what's going to happen? What's going to happen? They're going to take your money. So understanding where the smart money is at is very, very crucial when it comes to trading. Why? Because they want to go ahead and take your guys' money. And if they want to go ahead and do that, then what's going to happen is the fact that they're going to go ahead and do so until they have it and then run the other way. They get rid of all that liquidity and then keep moving forward. So I got about 3 minutes, guys. Throw a quick pair. I'll go through it and we'll go ahead and call it a day for today. And then you guys have questions, go ahead and drop them down right now. I have about 3 minutes to answer your guys' questions and also go through a pair. NZD USD. GPNG, wow, okay. Let's see, NZD, I'm going to check NZD USD. I don't really like this pair a lot. I used to trade it, not as much right now. I don't like the position where it's at. If I see it interesting, I'll go through it. If I don't see it interesting, okay. Cool, I like it. So right here, point of interest. Wait for it to come up one more time. To this area. Go on the 2-hour time frame before it drops. So look at on the H2 time frame. Look for this area. Draw out your zone. And look for some price action in that area. Okay, depending on your price action, then you can go ahead and enter for potential sales. But look at it. Okay, look at this area. We have good price action to the downside, then we take it. If we don't have price action to the downside in these areas specifically, what I'm showing you guys, don't take it. Okay. Let's go ahead and go. Yeah, this is gonna be posted on Facebook, on our Facebook group for the private students. US30, take a look at, you guys take a look at US30 when I'm not done. But well, I guess that's about it. I have about a minute. Just want to go ahead and thank you guys for jumping on today. I'm gonna go ahead and jump on with the private students on the other session. But thank you for jumping in today. I'll see you guys potentially next week or in 2 weeks when I go ahead and do another free session for you guys. Okay, so once again, thank you guys for jumping today. I'll see you guys later and have a really great, phenomenal week in trading. I'll see you guys then. Pay attention to Instagram if you guys want to go ahead and get free tips. See you guys later. Bye-bye.